Good morning, good afternoon, good evening. Hello. Welcome back. If you're new, welcome to you. Sorry, I'm recording from headphones at the moment. I'm away, so I don't have my microphone and there might be a little bit of background noise. But I just wanted to make this quick video to clarify that the channel is not dead. The portfolio is still going strong. But at the moment, I'm currently logging the dividends for the calendar year of 2022. So on the Irish tax system, I have to separate what dividends came from the US, what came from the UK, and what came from Ireland and from Europe. So that's what I'm doing at the moment. It takes quite a long time, but in order to speed it up, there was a few changes that I had to make, especially to the Excel sheet. Because if you've been with this channel for a long time, you would have seen the early draft of the Excel sheet, which was this, but with extra pieces. There was a section in the middle here and that gave the most recent dividend payment, like how much they paid per share, but it's taken way too long for me to manually put that in. So instead, I'm going to change the format a little bit. I've removed that section in the middle, so it makes it much easier for me to log the dividend payments. And instead of working from the payday calendar, which was a list of when each company pays its dividend and how much they're supposed to pay, I'm instead going to do that as the dividends come in. So whatever dividends, this is from 9th of September of last year. So if this was today, when I'm doing a breakdown video, I will just go through each one, how much it costs per share and how much they pay per share and how often they pay. Because it's taken way too long, not only to log the dividends, but to get the relevant information together to then release it. So there has been quite a few changes, and one very important one is that Trading212 has started paying interest on uninvested cash, and they've started paying interest on shares being lent out. So I was under the impression before that my shares were going to be lent out either way, and I emailed Trading212 about it, and they said at the time the only way to opt out was to close your account. And that was, I think, a year ago, maybe 2 years ago. So from that point onwards, I'd accepted that my shares are going to be lent out and there's not really much I can do about it because I love their platform. I'm going to keep on using it regardless. But now this option here, this is the payments received for the shares that are lent out and what shares are lent out, how much the total value of the lent shares are, and so on and so forth. I don't know why some of them don't have the names of the stock and the ticker symbol in them, but so how it works is somebody else who wants to short a stock or basically bet that a stock is going to go down, they will try to find shares to borrow, and some of my shares are being borrowed for that purpose. So the downside of this is that they can use your own shares against you to lower the value of the company on the stock market. But it doesn't really present a big problem for me because I just buy when there's dips. Because I work with such small amounts of money at any one time, if a stock goes down 10%, I just buy a small piece of it. So it's not a huge problem for me. But I know there will be a lot of people who are not going to be interested in this at all. So it pays the interest out every day, except for Sunday, I've noticed. But whatever shares were lent out on the Sunday, there will be a larger dividend payment the next day as a result of that. So here you can see the most borrowed shares. That's just in general, it's not my portfolio. And there was a period where AMC was going through, I think it was a stock consolidation, and I was getting paid like €1 or €2 per day from it. So the interest rate was like, it was very high, it was like 50%. But this percentage shown, that's per year. So you receive daily payments, but the total you get in a year will be, say, 3.2% if all of your money is in Nicola and all of your shares are lent out. So that's one additional stream, although it is a small one. It's almost like receiving another dividend payment just for the portfolio in general. So can't complain. And the other thing I wanted to talk about was the interest on uninvested cash. That's here. So very small, as you can see, 1.5% per year, and that's if, say, you have some cash in some of your pies or it's just in the free fund section, then this will pay interest on all of the cash in the portfolio that is not invested, regardless of where it is. If it's in cash form, it will pay a percentage, and that's 1.5% per year, so not great. I wouldn't bank on it as an additional stream of income. If I had, say, €1,000 in this account that was uninvested, I'd get a lot more than 1.5% investing it into something else. And I would also get to purchase shares. So, not particularly worth it, but it's just an extra little stream if, say, you wanted to keep your uninvested cash in Trading212 rather than a bank or a credit union or post office or something that doesn't pay any interest to you. So if you're sitting with a pile of what's called dry powder or liquid cash, it can be either or, you will get a small percentage of that paid back in interest per year. And just the portfolio itself, this is going to be a very quick video, so I just want to give you a kind of brief rundown of what's been going on. There's still 723 investments in the portfolio overall, and all of my monthly paying stocks have taken the top positions. GameStop is obviously a gamble. AMC was up here, but it's diluted so much now that it's worth like less than €100, and I put 850 in, so I got wrecked in that one. But I've now put enough into all the monthly paying stocks that I can kind of leave them alone. There's enough risk in that section compared to the rest of the portfolio. And now I'm going to focus on filling these pies up. So if you're brand new to the channel, welcome to you. But the idea behind this is to have so many different companies in different countries working with different currencies that investing into the portfolio is kind of mechanical. I don't get up and think, oh, well, what's the 10-year plan for this company, and have to keep track of it. And if I get bad news, I might panic a bit and sell. And there's none of that because there's such a small amount spread out across so many companies and stocks and ETFs and all that it kind of negates the risk. Now, it lowers the reward significantly, but it also lowers the risk significantly. I don't know enough about investing in the stock market to make these massive, like Warren Buffett type bets. But the general gist of it is, these pies down here are the A to Z of every single position. So every stock, bond, ETF, the whole lot has a position in these pies going down. And it's just organized alphabetically to make it easier. So they're all in there. And then we have these lists of, if you've ever heard of the like dividend contenders, challengers, the champions. A lot of people have heard of the dividend aristocrats, but there is ones above that and there's ones below. But these are companies that meet a certain criteria, like a certain market cap. They haven't missed a dividend payment in, say, these are, I think, 10 years. And they've also raised their dividend with every payment. So once they stop doing that, they fall out of this list. But the reason I have these all separate is all the companies in these lists also have a place down here in the A to Z. So if I max out all of these pies, that gives every single position minimum of €100. And then if I max out, say, the dividend kings, anything in here like 3M, for example, there will be €100 in 3M here and €100 in 3M here. And if 3M meets any other criteria and it's in one of these pies, that will be an additional €100. The idea behind every pie is to have €100 in every position. And the reason behind that is that that's roughly €1 per dividend payment. Sometimes it's more, sometimes it's less, but that's the foundation that I want to lay going forward. So these are a list of some of the best dividend payers in the UK. These are all the ones that pay every month. This one is desperately in need of an upgrade. So when I'm finished logging the dividends, I'm going to do a head count of the portfolio and figure out who's gone missing, who's changed name or ticker symbol. If any of them have never paid a dividend payment, then I'll sell them. But apart from that, I'm going to try not to sell any position ever, unless it's never paid. And then out here in the investment section, the reason I have everything separated in pies is that if I didn't, then this list here would be an A to Z of every single position. And you can already see it's lagging a little bit here. If I have every single position in the portfolio out here, the app actually doesn't work properly for me. I'm working off a laptop, so it's not great. But I can't actually function. It doesn't work with that. This is new. Global net lease. Yeah, if you use Trading212, you may have seen this happen before where you have, like I've got 5.84 shares in this. It's worth 58.80 and that's a profit of 58.80. So it's a little thing that I think Trading212 should fix. is that this company used to be Necessity Retail, then they were bought by Global Net Lease. So the amount of money that I had invested in Necessity Retail, let's say it was €50, this amount here, how much invested, that went down by 50. And if I received this, say, as a large dividend payment, my dividends would have went up. So it kind of messes up the values of how much I have invested, how much I've received in dividends, what my profit is. It doesn't really just transfer it over smoothly. It kind of removes it from invested cash and then gives you this position at 100% profit. So I don't know, maybe it's intentional and it's like a tax thing where you can say, oh, well, I actually lost €100 on this company. And I don't know, to be honest. I'll figure it out as I go. But this is a new one. I'll have to add this in. Global Net Lease. But yeah, since the last video, it's been like, I think half a year since I put a video out. So although I'm not really ready to talk about the portfolio properly because I haven't finished logging the dividends, I don't know who's gone missing. There's a lot of work I have to do. I'm in the process of doing it now. But I will give you a rundown of who's doing the best and who's doing the worst. So this is from the top. Oh, Rolls-Royce is actually doing very well. I'm 167% up because I bought when it was very low, down about here. So it's doing well, recovering. We got Frontline, Valero Energy, Haleon, ConocoPhillips, Schlumberger. These are a lot of energy companies. They're obviously making a considerable amount of money. Cross Timbers royalty is 100% up. I remember making a video about this company because of how well it was doing, and then in the process of actually making the video, this happened. So it was a good learning experience for everyone that if you're not prepared to watch this happen, I should have bought down here, but it could have kept going down, could have went to zero. That's the risk that you take. But if you have a long-term plan and you believe in the companies you're investing in, you don't really have to worry about these dips unless you're worried about not having cash to buy more. A lot of big players, a lot of energy companies. I'll have a quick look at who's doing the worst. That would be interesting. I haven't seen that in quite a while. Of course. Oh, God, I didn't think it was that bad. 98% down. That is abysmal. So I got up around here is where I got in. Atrocious. Now I did buy like down low. It popped off a bit. Sold some, bought back in, then sold again. But one mistake that I made was buying back in up here with the hopes that it would go even higher. If you have a stock that goes from, say, $21 to $500, sell. Simple as that. That's the only thing I can really say. If it does that in the space of a couple of months, you should sell it and reevaluate. No, don't do what I did. This company, Adler, I think this is the largest real estate company in, I don't know if it's Europe or just Luxembourg, but it is getting absolutely wrecked. This new section here, lending info, the demand is how much, like the demand of the shares, how much people want them, basically. And then this is the interest you would earn. But although this has done very badly, nobody wants to bet on it going down, so I don't know how to feel about that. Well, nobody wants my shares. So it could make no difference whatsoever to me, but I don't really know what's going to happen with that one. These have been delisted, yeah, so it's probably just going to disappear. So I'm looking at quite a lot of losses going forward. That's a massive one, €830 down. It's just horrendous to look at. I'm actually at the point of that I want to sell it just to get rid of it. It's such a massive €830 in the red, and the portfolio overall is about 1,800 down. So that would bring my portfolio to like 8% down, maybe 7%. But I really don't want to sell just out of spite. There's a few. They've been sanctioned. This one is doing a kind of controlled demolition. They've been paying massive dividend payments out. As you can see, that's what these are. They're paying these huge dividends out because they're winding down the fund. So that's an interesting one. Here's some details for how much of it is lent out. So at least a lot of the ones down the end are kind of lost causes, and a lot of them are just bets. They're not dividend stocks I planned on keeping. So that's the mistake that I made. Made quite a bit of profit when everything was going bananas, and then I put it back in like an idiot. Don't do that. But it's quite a few that are very, very low. So when I have a bit of cash to put back in, I'm going to just like something like this, Walgreens, and if you're in like Ireland or the UK, Boots. That's the two of them together, Walgreens in the States and Boots in Ireland and the UK. This is one that I'd have no problem putting more money into at all. I have faith that they will continue. Look, 200,000 employees. I have faith that they will continue as they're going. And that is very tempting. 8.56% yield. So I'm actually going to have a look and see if I have even €10 to put in there. That would be a nice one. But anyway, that's the kind of general gist of what's going on. The channel is inactive at the moment, but not dead. And I am still working away the portfolio, but I still have a lot of backlog stuff to do. So I will resume. And I'm also going to put some time into learning how to edit videos, make them a bit more entertaining, and to kind of present the information in a fun way that isn't just screen recording and voice recording. I'd like to learn how to edit videos properly and do animations and stuff like that, just to make it a bit more engaging. But that's the general gist. Still going strong. I've about 16 grand invested. Now it is closer to 17 grand, but that €830 in AMC, that's a lost cause. That's gone. So I've got closer to like 15 grand. Sorry, closer to 16 grand invested. But that's the general gist of it.